Tonight we're spotlighting Sandvik, a Swedish engineering powerhouse you may not know, but whose impact is everywhere. Founded in 1862, Sandvik has grown from a small steel producer into a global leader in engineering solutions, with a presence in more than 150 countries. Over the decades, the company has built a reputation for innovation, quality, and reliability, quietly shaping the industries that drive our modern world. Sandvik is like a global workshop, making advanced metal-cutting tools and heavy-duty mining equipment that shape the world around us. Their products are at the heart of manufacturing, construction, and mining operations, enabling companies to work faster, safer, and more efficiently. Their tools help build everything from airplane engines to medical implants, while their mining machines dig up the metals that power our cities. Whether it's the steel in skyscrapers or the precision parts in life-saving devices, Sandvik's technology is often behind the scenes, making it all possible. Because Sandvik supplies so many industries worldwide, its performance is a bellwether for the global economy. The company's reach extends across continents, connecting supply chains and supporting countless jobs in manufacturing, mining, and engineering. When Sandvik thrives, it signals strong industrial activity. When it struggles, it can hint at a slowdown. Investors, analysts, and industry leaders all keep a close eye on Sandvik's results as an indicator of broader economic trends. That's why their financial results matter far beyond Sweden. The company's performance can ripple through markets, affecting suppliers, customers, and even national economies. Today, we're diving into Sandvik's just-released financial report for the first quarter of 2026. This report offers valuable insights into how the company, and by extension the industries it serves, are faring in a rapidly changing world. These numbers offer a snapshot of how the year is starting for both Sandvik and the industries it serves. We'll look at key figures, trends, and what they might mean for the months ahead. Let's break down what their results reveal about the state of global manufacturing. From order volumes to regional performance, Sandvik's data can help us understand where the world's factories are headed. Here's what you need to know as we unpack Sandvik's latest numbers and what they signal for the future of industry worldwide. At the start of 2026, most analysts predicted a steady, if unspectacular, performance from Sandvik, but the company managed to deliver a result that truly caught the market off guard, exceeding even the most optimistic expectations. Sandvik's core profit didn't just meet forecasts, it soared well past them, demonstrating a remarkable level of strength and adaptability in the face of ongoing market uncertainty and global economic headwinds. The company's operating profit climbed by 6%, reaching 6.14 billion Swedish crowns, which is roughly 671 million US dollars. This impressive figure not only beat expert predictions but also set a new benchmark for the company's performance. This significant jump highlights how Sandvik is excelling at both selling its innovative products and keeping costs under control, even as the industry faces supply chain disruptions and fluctuating demand. For a global company of Sandvik's scale, a 6% profit rise is no small feat. It's a clear indicator of the company's operational excellence and strategic focus. This performance signals not only resilience, but also a robust demand for Sandvik's advanced tools and equipment across multiple sectors, from mining to manufacturing. For investors, these results show a company that knows how to grow and adapt. For employees, it means greater job security and pride. And for customers, it reinforces Sandvik's reputation as a reliable, forward-thinking partner. This surge in profit sets an optimistic and energetic tone for the rest of 2026, inspiring confidence throughout the organization and among stakeholders. Sandvik's strong start is a testament to its ability to skillfully navigate a complex, ever-changing global landscape, leveraging innovation and expertise. But what's fueling this impressive growth? Let's dig deeper and uncover the strategies behind Sandvik's success. When measuring the true progress of a business, experts focus on a key metric called organic sales growth. This figure represents the increase in sales that comes directly from a company's own operations, meaning it excludes any boosts from buying other companies or from fluctuations in currency exchange rates. For Sandvik, organic sales growth is a way to see how well their core business is performing, without any outside influences muddying the picture. It's a pure indicator of customer demand and operational strength. In the first quarter of 2026, Sandvik achieved an impressive 15% organic sales growth. This means that, compared to the same period last year, factories, mining companies, and industrial clients are choosing to buy significantly more Sandvik products. It's a testament to the company's reputation for quality and reliability, and it shows that Sandvik's solutions are in high demand across the industries they serve. This isn't just a temporary spike or a lucky break. It's solid evidence of strong, ongoing demand for Sandvik's products and services. Organic growth like this demonstrates that customers around the world value what Sandvik offers, and that trust is being rewarded with increased orders and long-term partnerships. Such growth is a clear sign of business health and momentum. When a company sells 15% more products through its own efforts, it naturally drives up both revenue and profit. It also signals that the company's strategies are working, and that its teams are executing well in the marketplace. Achieving this level of organic growth, especially during uncertain economic times, highlights Sandvik's leadership and resilience in the industry. It shows that even when the market is challenging, Sandvik's products remain essential to their customers' operations. This organic growth is the engine that powers their surge in profits and sets them apart from competitors. Ultimately, organic sales growth is what every company strives for, but very few are able to achieve it at this scale. For Sandvik, it's a mark of true business strength and a foundation for future success. Another key metric is order intake, the value of new orders placed but not yet delivered. Think of it as a restaurant's reservation book. A full one means busy times ahead. Sandvik's order intake, especially for cutting tools, was even higher in early April than in Q1. This suggests demand isn't just holding steady, it's accelerating. Real-time order data gives us a glimpse into Sandvik's immediate future. Factories are placing big orders, expecting strong production ahead. High and rising order intake provide stability and predictability for Sandvik's next few months. Even if the broader economy wobbles, Sandvik has a backlog to work through. This momentum is a strong reason for optimism. Customers are locking in Sandvik's tools to meet their own ambitious goals. Despite strong results, Sandvik's CEO, Stefan Viding, remains cautious. The economic and political climate is highly uncertain, like sunshine now, but storm clouds on the horizon. Central banks are battling inflation, which can slow growth and make planning tough. Supply chain disruptions remain a real threat, as recent years have shown. For a global company like Sandvik, stable supply chains are vital. Any disruption, natural disaster, health crisis, or trade dispute could create serious challenges. This uncertainty means predicting the next 6 months is difficult, even with strong current performance. Sandvik's leadership is staying vigilant, ready to adapt if conditions change. Responsible management means balancing optimism with caution. The company's strength today doesn't guarantee smooth sailing tomorrow. Geopolitical risk is a major concern for global companies like Sandvik. Conflicts, trade tensions, and political shifts can disrupt shipping, close markets, or drive up costs overnight. In 2026, several geopolitical hotspots are making international trade unpredictable. Sandvik must constantly monitor political developments in every region it operates. Tariffs or sanctions can instantly change the business landscape. A conflict can delay shipments or make raw materials scarce. These risks directly impact Sandvik's ability to deliver products and maintain profits. Success now depends on both making great products and adapting quickly to global changes. Sandvik invests in flexible plans to navigate this complex environment. In today's world, Agility is as important as innovation. A key to Sandvik's success is tungsten, one of the hardest, densest metals on Earth. Tungsten gives Sandvik's cutting tools their legendary strength and heat resistance. Without tungsten, modern manufacturing tools wouldn't exist. Recently, tungsten prices have soared due to tight inventories and export controls from China, the world's top producer. Industrial demand remains high, pushing prices even higher. This creates both a challenge, rising costs, and an opportunity for those with secure supply. Companies with reliable tungsten access have a major edge. The volatility in tungsten markets is reshaping the cutting tool industry. Sandvik's position in this market is unique. Let's see why. Sandvik's strategic advantage: it owns its own tungsten mine. While competitors scramble for supply and pay soaring prices, Sandvik controls its own source. This shields the company from price spikes and shortages. Owning the mine means stability, cost control, and uninterrupted production. In today's tight market, this has become a powerful competitive edge. Demand for Sandvik's tungsten powder has jumped, as others seek reliable supply. Market uncertainty for others has turned into new business for Sandvik. This long-term investment is paying off right when it matters most. It's a key reason for Sandvik's strong results and confidence in a volatile market. What does all this mean for investors? Despite strong results, Sandvik's stock barely moved on announcement day, because it had already climbed 30% earlier this year. Investors had anticipated good news, and the fundamentals remain strong. The Q1 report confirms Sandvik's resilience and strategic edge, especially in tough times. Demand for essential industrial products is robust, even in an uncertain world. Strategic moves like owning a tungsten mine turn market challenges into advantages. Sandvik's success signals strength for the entire manufacturing sector. It's proof that innovative, well-managed companies can thrive amid global risks. Sandvik's story in 2026 is one of strategy, strength, and cautious optimism. Thanks for watching.